Hello and welcome to a new video of Municipal Finance for Everyone. In this video, we'll break down the United States Monthly Employment Situation Report, often called the Payroll Jobs Report. We'll explain who produces it, what's inside it, and how to interpret those closely watched employment numbers. By the end, you'll be able to read the jobs report like a pro, no matter where in the world you're watching this video from. The goal of this video is educational. It should allow you to better understand the videos that we will publish every time this report is released. What we mean by that is that we will start very soon to publish a new video every time a new report will be publicly available. For this reason, you should subscribe to the channel and not miss out any of our updates. These are some of the many things we will cover in this video. How often is this job report published? What data and surveys are used to create this report? What does the word payroll actually mean? What industries are captured by this report? And which industries and jobs are not captured by this report? Why is this report adjusted to account for seasonal patterns? How is the unemployment rate captured? Did you know the report also captures hourly earnings data? Why are the prior 2 months BLS estimates revised? And why is there a final annual revision to the data? Alright, let's dive in. The jobs report is released by the U.S. Bureau of Labor Statistics, aka BLS. This is the government agency in charge of labor market data. It comes out monthly, usually on the first Friday of the month at 8:30 a.m. Eastern Time, covering the previous month's data. Keep in mind that if there's a government shutdown at time, the data should be released. Like it happened at the beginning of October 2025, the data is either released post the shutdown or not released at all. This report is one of the most important barometers of the U.S. economy's health, and is closely watched by markets, policymakers, and media around the globe. A strong or weak jobs report can impact stock markets, bond markets, currency values, and even decisions by central banks. We will show later some graphs representing how the stock market usually reacts right after the data is released. Let's see how any of you could review this data for free online. The first step is to open any browser and search for non-farm payrolls. Click on Employment Situation Summary link from the BLS.gov website. This is the real official BLS website. Once there, you should see what we just said, meaning it was released on the first Friday of the most recent month. In this case, September 2025. The Employment Situation Report, that is, the non-farm payroll report, is built from two large nationwide surveys. The first is the Household Survey, officially called the Current Population Survey, or CPS. It has been running since 1940, making it one of the oldest continuous surveys in the United States. Each month, it interviews about 60,000 households across the country. This survey focuses on people, asking each household who is working, who is unemployed but looking for work, and who is not part of the labor force at all. The second is the Establishment Survey, officially called the Current Employment Statistics Survey, or CES. It's even older, dating back to the 1910s, and today it collects data from more than 120,000 businesses and government agencies at over 600,000 worksites. This survey focuses on jobs, meaning it asks employers how many workers they have on their payrolls. And just to be clear, a payroll is simply the official list of people a company pays. The survey also tracks average hours worked and average hourly pay for these employees. In short, the Household Survey, CPS, tells us about people, which is where we get the unemployment rate from, while the Establishment Survey, CES, tells us about jobs, which is where we get the monthly change in non-farm payrolls. By combining both, the BLS agency produces a comprehensive snapshot of the labor market each month. We will review each of them in a moment. Back to our BLS website example. If you scroll down a little bit, you will first see this section related to the household survey data, with a descriptive summary. For example, the most recent report is from the first Friday of September 2025 and states the following. Both the unemployment rate at 4.3% and the number of unemployed people at 7.4 million changed little in August. These measures also changed little over the year. See Table A1. Among the major worker groups, the unemployment rates for adult men 4.1%, adult women 3.8%, teenagers 13.9%, whites 3.7%, blacks 7.5%, Asians 3.6%, and Hispanics 5.3% showed little or no change in August. See Tables A1, A2 and A3. Scrolling down a little further, we also see a section related to the establishment survey data. In simple words, the employment report. For example, it states the following. Total non-farm payroll employment changed little in August, plus 22,000, and has shown little change since April. Over the month, a job gain in healthcare was partially offset by losses in federal government and in mining, oil and gas extraction. See Table B1. Scrolling down a little further, we can see both the A and B tables just referenced, as well as other tables. Again, all we've done so far was scrolling down from the top of the web page. We will see content of these tables shortly. You might be wondering, how can just 2 surveys represent an entire country? The answer lies in scale, science, and consistency. The establishment survey includes over 120,000 businesses and government agencies, covering about 600,000 worksites. That's roughly a quarter of all non-farm employees nationwide, from factories and schools to hospitals and tech firms. On the other hand, the household survey interviews about 60,000 families every month, chosen scientifically so that they reflect the U.S. population's diversity by region, age, gender, and background. The Bureau of Labor Statistics and the U.S. Census Bureau reach out mostly by phone, mail, or secure online systems. Many employers submit data directly through automated payroll software, while households typically answer by phone with trained census interviewers. To be clear, participation is completely voluntary, and no one is paid for responding. People and businesses take part because the information helps shape economic policy and gives the public a clearer picture of the job market. Now, do they always reach exactly 60,000 households or all 120,000 businesses every month? Not quite. Some people move, change phone numbers, or simply don't respond in time. That's why each month, the number of completed responses varies a bit. When that happens, the BLS still uses the data it has, but it applies statistical weighting, meaning each completed response might represent a slightly larger share of the population, ensuring the estimates still add up correctly nationwide. Are the response rates published? Yes. The actual response rates are published. If you look at the official jobs report tables or the accompanying technical notes, you can find the response percentage for both surveys. In recent years, that's been about 70 to 75% for the household survey and around 40 to 45% for the business survey. These numbers are transparent because the BLS wants users to understand how much data came directly from responses and how much was modeled. Finally, all individual responses are strictly confidential by law. Individual names or companies are never revealed. The results are only shown in aggregated form, meaning combined totals that describe trends, not individual stories. So even if every single person doesn't answer, the surveys are still large enough, and the methods strong enough, to capture an accurate snapshot of the entire U.S. labor market each month. It is not possible to see which individual employers actually participated in and provided answers on any given month. The jobs report packs in a lot of information. The first headline number is usually the change in total non-farm payroll employment, basically, how many jobs were added or lost in the economy over the past month. When you hear the news say, the US added 180,000 jobs last month. That's the headline number, the top figure from the non-farm payroll report. It tells us how many non-farm jobs were added or lost across the country in the previous month. In other words, it tells us what's the net change of jobs. A positive number is good for the economy and people living in the US. A negative number is not good. Non-farm simply means the BLS doesn't count agricultural workers, since farming is seasonal and follows very different patterns from most other industries. What does the word payroll mean here? It's simple. It refers to the list of people actually receiving a paycheck from an employer. Each worker who is paid counts as one job. This headline number covers nearly every corner of the economy: manufacturing, construction, healthcare, retail, education, finance, hospitality, and government. So when a restaurant hires 2 new servers or a hospital adds 20 nurses, those are 22 new jobs added to the payrolls. Multiply that across millions of businesses, and you get the total change that makes up the famous headline figure everyone watches. Another important thing to understand: the BLS Establishment Payroll Survey counts jobs, not people. What does that mean? Let's answer with an example. If a person is employed as a waiter in 2 different restaurants, does that count as 2 jobs in the BLS payroll report? If one person works as a waiter at 2 different restaurants, each employer reports that person on its payroll, so the survey records 2 jobs. Again, that's why we said the BLS Establishment Payroll Survey counts jobs, not people. By contrast, the household survey counts people. That same waiter would be counted as one employed person, though the household survey also tracks the share of multiple job holders as a separate statistic. The non-farm payroll report covers most of the US economy. In fact, around 80% of all American workers are counted here. It includes both private sector jobs and government jobs, from federal workers in Washington, D.C. to teachers and police officers in local communities. So what kinds of work does it track? First, there's manufacturing and construction, the people who make things and build things. Factories, auto plants, home builders, and electricians all fit here. Next, retail and wholesale trade, covering everyone from supermarket cashiers to warehouse workers who help keep shelves stocked. Then comes transportation and warehousing, which includes truck drivers, delivery workers, airline staff, and the people who move goods across the country. The information and technology sector captures jobs at newspapers, movie studios, TV networks, and tech companies, from reporters to coders. Financial services count everyone from bank tellers to stock analysts. Professional and business services include lawyers, consultants, accountants, and people who help other businesses run smoothly. Education and health are huge too. Teachers, nurses, doctors, and university staff all fall under this umbrella. Leisure and hospitality covers restaurants, hotels, theme parks, and all the workers behind those experiences: servers, chefs, housekeepers, and more. Finally, there's government, which includes employees at every level, federal, state, and local, like counties and cities and towns. Together, all these sectors show the heartbeat of the American job market, from building homes and teaching kids to caring for patients and serving coffee. That's what makes the non-farm payroll report so rich. It's a monthly snapshot of the entire working world, except for a few special cases we'll see in the next slide. Back to our BLS website example, we saw earlier that Table B contains jobs data. This screenshot shows the content of such table. As we can see, the first table reports a breakdown by industry over the past 3 months. To be clear, each value shows the change in number of jobs from the prior month in thousands. For example, the value 22 displayed under August 2025 means 22,000 jobs were added from July to August. So let's say there was a total of 1 million jobs captured by the report for the month of July 2025. This 22 means the total number of jobs counted for the month of August was 1,022,000. Notice on top of the table it says, seasonally adjusted. We will see shortly what that means. Now that we know what's inside the non-farm payroll report, let's look at what's not included, because that's just as important. As the name implies, non-farm payrolls exclude farm work. Agricultural jobs aren't part of this report. So farmers and farm laborers won't show up in the payroll job count. Farming jobs change a lot with the seasons, planting, harvesting, and weather, so they follow a very different rhythm from the rest of the economy. The report also doesn't include private household workers, for example, babysitters, gardeners, or nannies who are paid directly by a family rather than a business. Next are self-employed people, small business owners, freelancers, and gig workers who don't receive a paycheck from an employer. So if someone drives for a rideshare app, runs their own bakery, or works as a freelance designer, they're not counted here. What if we have a person owning a plumbing LLC company with 5 employees? If the plumber owns the business, the LLC, and pays him/herself as an owner, not as an employee on payroll, then he/she personally is not counted in the non-farm payroll report. That's because the BLS only counts employees who receive a paycheck subject to payroll taxes, like Social Security and Medicare. However, the 5 employees who work for that plumbing company are counted if the business reports them through a payroll system, for example, paying regular wages and withholding taxes. The same goes for unpaid family workers, like people who help in a family store but don't get a formal salary. They are not included nor counted in the report. And finally, the U.S. military and employees of certain U.S. intelligence agencies are also not included in the non-farm payroll report, since their employment is tracked separately by the Department of Defense. So how does the Bureau of Labor Statistics, the BLS, take surveys from thousands of employers and households and turn that into a single, nationwide jobs number? The process starts with those 2 major surveys we talked about, the Household People Survey and the Establishment Jobs Survey. From the Establishment Jobs Survey, the BLS collects payroll data each month from about 120,000 businesses and government agencies. Those businesses report how many people are on their payrolls, what their average hours are, and how much they're paid. Once the BLS receives that information, it uses statistical models to represent the entire economy, including similar businesses that didn't respond that month. In simple terms, if the data show that construction companies of a certain size increase staff by 2%, the BLS assumes similar companies that didn't respond likely did about the same. This process is called estimation. It's what allows the BLS to turn responses from 120,000 businesses into a total representing the roughly 10 million business establishments in the US. Each month, when late responses come in, the BLS updates its models to make the estimate even more accurate. You can think of it like building a giant picture from puzzle pieces. Every company and household that responds adds one piece. Even if a few are missing, the BLS can still complete the image based on the surrounding pieces. That's how we get the total number of non-farm payroll jobs, a nationwide estimate based on real payroll data, adjusted using reliable statistical techniques to fill the gaps. Many jobs follow predictable seasonal patterns. For example, shops hire extra workers before the winter holidays and then reduce staff in January. Schools close for summer, affecting jobs in education and student work. Construction slows in cold weather then speeds up in spring. If we looked at these raw numbers alone, we would see big ups and downs every year, and we might wrongly think the economy is suddenly booming or crashing. To avoid that confusion, the BLS applies seasonal adjustment. In simple words, they remove regular repeating patterns that happen around the same time every year. This helps reveal the true underlying trend, whether jobs are genuinely rising or falling beyond the normal seasonal rhythm. The headline jobs number you hear in the news, like plus 180,000 jobs this month, is almost always seasonally adjusted. The BLS also publishes the not seasonally adjusted figures for researchers and anyone who wants to see the raw, unfiltered data. One extra note: each year seasonal patterns are re-estimated to reflect the most recent data. That keeps the adjustments up to date as the economy changes. The key idea is simple: seasonal adjustment keeps us from mistaking normal holiday or school effects for real shifts in the economy. It gives us a clearer view of what's actually happening to jobs. Let's take a closer look at the unemployment rate, one of the headline numbers in every jobs report. The unemployment rate comes from the Household Survey, the survey that asks people about their work status. It measures the share of the labor force who do not have a job but are actively looking for one and are available to start work. A quick way to picture it. Imagine a town where 100 people are in the labor force. That means they either have a job or are looking for one. If 4 of them are jobless and actively searching, the unemployment rate is 4%. It's just as important to see who is not counted. People who are not looking, for example full-time students, retirees, parents taking time out, or discouraged workers who stopped searching, are example of people outside the labor force. So they are not included in the unemployment rate. The report also breaks down unemployment across different groups: adult men and women, teenagers, racial and ethnic groups, and education levels. These details help us see whether some communities are facing a tougher job market than others. 2 companion measures give helpful context. The labor force participation rate tells us what share of the entire population is either working or looking for work. The employment population ratio shows what share is actually working. Why do these matter? Because a low unemployment rate can look impressive, but if participation is also low, it may mean many people have simply stopped looking. Taken together, these measures give a fuller picture of the job market's health. Let's go over an example. Let's make this very clear with an example. Imagine a town with 100 adults. 55 people have jobs. 5 people do not have jobs but are actively looking. 40 people are not looking for work right now: students, retirees, caregivers, or discouraged workers. First, define the labor force. It includes people who have a job or are looking for one. In our town, that's 55 working plus 5 looking, and that gives us 60 people in the labor force. Now the 3 key measures. Unemployment rate is given by people without a job but looking, divided by the labor force. In our example, that would be 5 divided by 60, and that's equal to 8.3%, meaning 8.3% of the labor force is unemployed. Next, we have the labor force participation rate. This rate is given by labor force. 60 people. Divided by the total population. 100 people. Hence the ratio gives us 60%, meaning 60% of adults are working or looking. Last but not least, we have the employment population ratio. This ratio is given by the number of working people. 55. Divided by the total population. 100. That gives us 55% of adults have jobs. Notice how these 3 numbers tell different parts of the story. Unemployment rate 8.3% says how job seekers are doing. Participation 60% shows how many people are even in the game, working or looking. Employment population 55% tells us how widely jobs are spread across all adults. Back to our BLS website example, we can navigate the website to go to Table A that contains unemployment data. Screenshot below shows what the top-hand side of this table looks like. For example, we can see the unemployment rate as of August 2025 was 4.3%, up from 4.2% in July 2025. Scrolling down further, we can also see the unemployment breakdown by race and age. Screenshot below shows what the top-hand side of this table looks like. For example, we can see the unemployment rate as of August 2025 was 4.3%, up from 4.2% in July 2025. Beyond jobs and unemployment, the report tracks earnings and hours, 2 simple numbers that reveal a lot about the economy's heartbeat. Average hourly earnings tells us how much workers are paid per hour on average. If this number is rising quickly, it means paychecks are growing. That's good news for workers and a sign that employers are competing for talent. But very fast wage growth can also create inflation pressure if companies raise prices to cover higher labor costs. This is why central banks watch wage growth closely month after month. The report usually states the change this month and the increase over the past year. For example, up 0.3% in the month and 4.0% over the year. Average workweek shows how many hours per week employees are working on average. For private sector workers, a typical figure is about 34 hours, if companies are cutting hours, say from 34.4 to 34.1. It can hint that demand is softening and firms need less labor. If hours are rising or overtime is increasing, it often means demand is strong. Many firms try to stretch current staff before they hire new people. Put together, wages and hours help us see the quality and intensity of the job market, not just the headcount. Think of these two as a simple dashboard. How much are people paid? And how busy are they? The answers provide vital context for understanding where the economy may be heading next. Back to our BLS website example. Table B, if we scroll down a little bit, we can see average hourly data published in September 2025. For example, the average number of hours worked by each person in a single week was 34.2 hours. The jobs report attracts so much attention because it has real effects on the economy and on financial markets. When the report shows strong job growth and fast rising wages, it suggests the economy is running hot. The Federal Reserve may consider raising interest rates to keep inflation in check. Bond and currency markets react quickly to that possibility, because higher interest rates change the value of existing bonds and can strengthen the dollar. If the report is weak, for example with job losses or a rising unemployment rate, it can signal slower growth or even recession risk. In that case, the Federal Reserve may lean toward holding rates steady or cutting them to support the economy, and you often see stock prices fall on the bad news or, at times, rise on hopes of lower rates. Investors do not look only at the headline jobs number, they also study wage growth, average hours worked, labor force participation, and which industries are hiring or cutting. These details help them judge whether demand is heating up or cooling down, and how policy might change next. This is not just a United States story. Because the United States is a large part of the world economy, its jobs report can ripple through global markets. Stocks, bonds, and currencies around the world can move within minutes of the 8:30 a.m. Eastern Time release. In short, this report functions as a regular report card on economic momentum, watched by Wall Street, government officials, businesses, and households alike. You might wonder why these numbers are revised at all. It is a normal part of the process. Each monthly jobs report does two things at the same time. It presents the latest month's estimate, and it also revises the previous 2 months using the newest information. The payroll survey is very large and participation is voluntary. Not every employer responds before the tight publication deadline. In the following weeks, more payroll reports arrive, so the Bureau of Labor Statistics incorporates those late responses and updates the totals. There is another reason revisions occur. Seasonal adjustment factors are refreshed as new data come in. Because the economy changes over time, the model that removes predictable holiday and school effects is continually refined. When those factors are updated, they can nudge recent months a little higher or lower. Think of the first release as a fast first draft. It sacrifices a little precision so the public can see the data quickly, only about a week after the month ends. The next month, with more survey responses and updated seasonal patterns, the BLS issues a cleaner second draft. 1 month later, a third draft arrives based on still more information. Each revision uses additional data, so it is generally a more accurate read on employment. By the time 2 rounds of revisions have passed, the monthly job change is usually quite reliable, aside from the separate annual benchmarking process we will discuss next. So when you see a headline like, "Last month revised down by 30,000 inches," it is not a mistake, it is the system working as designed, using incoming data to sharpen the picture of how many jobs the economy truly gained or lost. Beyond the regular monthly revisions, there is a larger, once-a-year adjustment called the benchmark revision. Each year, the Bureau of Labor Statistics compares the survey-based employment estimates to a more complete source called the Quarterly Census of Employment and Wages, or QCEW. The QCEW functions like a sort of census of payroll jobs, because it is built from the unemployment insurance records that employers file with their state. What does unemployment insurance mean here? It is a state-run program that provides temporary income to people who lose their jobs through no fault of their own, such as after a layoff. Employers fund the program through payroll taxes, and to administer it, states require employers to file quarterly reports showing how many people they employed and how much they paid them. Those filings create a detailed, almost universal list of payroll jobs by firm, industry, and location. If the QCEW is quarterly, why not update the Payrolls jobs report every 3 months? Because although employers file every quarter, the QCEW data arrive with a significant lag. They must be collected, processed, and validated by states and then by the BLS. By the time they are ready, they are several months old. The monthly jobs report exists to be timely. It tells us what happened last month. Constantly rewriting the series every quarter would make it hard to track current trends. Instead, the BLS follows a balanced approach. It publishes a fast monthly estimate from the survey, then once a year aligns that survey to the slower, more complete QCEW counts. Here is how that alignment works. In early September, the BLS releases a preliminary benchmark revision. This is an early estimate of how much the prior survey figures will need to be adjusted, using the most recent QCEW data through March. No data is updated or changed as of yet. It covers the March to March span, and serves as a heads-up rather than a change to the published series. For example, in September 2025, the preliminary benchmark indicated that payroll employment over the year from March 2024 to March 2025 was about 911,000 lower than first reported, suggesting the job market had been somewhat weaker than the initial survey estimates implied. The official final benchmark is then applied with the January data and released in February. At that point, the prior year's monthly levels are actually revised to match the QCEW anchor and smoothed around March. Let's do one more example. The preliminary estimate in September 2024 was about -818,000, and so it suggested payrolls might have been overstated over the prior months. When BLS released the January 2025 report in February, it turned out the economy had about 598,000 fewer jobs as of March 2024 than previously estimated. So this was still saying jobs were overstated by not as much as indicated by the preliminary estimate in September 2024. At that point, BLS updates all the previous year's monthly employment levels to align with the actual counts from those unemployment insurance records. In practical terms, they go back and revise each month so that March matches the QCEW count, and they smooth the changes before and after March. One challenge behind these statistics is that fewer businesses and households are answering the surveys than in the past. Before 2020, the payroll survey's response rate was roughly 60%. Since 2021 it has been below 50%, and for March 2025 it was about 43%. That means the first monthly estimate is sometimes based on less than half of the sampled employers, with late reports arriving after the initial release. The Bureau of Labor Statistics says that, even with lower response, the survey remains usable. They apply established methods to correct for missing responses and to reduce bias. In practice, the average revision from the first estimate to later estimates has remained modest, typically on the order of tens of thousands of jobs. Still, lower participation introduces more uncertainty. A smaller share of responses can make the first estimate a bit noisier and raises the chance of larger revisions if the late reporters turn out to be different from the early ones. For readers of the report, the lesson is simple. The headline numbers are estimates, not a headcount. They are designed to be timely and are later refined as more information comes in. Knowing the response rate helps you judge how much confidence to place in the first print versus the revised figures that follow. The BLS is quite transparent in terms of response rates. As the screenshot shows, there's a section on their portal where we can see response rate trends by survey type. For example, we can see the historical CPS response rate in dark gray below. As a reminder, CPS stands for Current Population Survey. This is the people survey that allows to estimate unemployment rates. It used to be at 88% in 2015, and it's now close to 67%.